It's time to unlock your world of accounting with Chakani Institution. Our tutorials covers financial accounting, managerial accounting, and more. Subscribe, like, and share so that you can start building your accounting skills. Hashtag our pride is more educational. Let's get started. Hi everyone, my name is Chakani Rutendo. I'm your accounting expert, and I hope that wherever you are, you have got the pen, a paper, and also the calculator, because we are about to play with numbers. And if it's the first time on our YouTube channel, make sure that you subscribe, like, and share with other students. So let's get started. So today I want us to go through a very important chapter in grade 11 and also in grade 12. So this chapter is called the Creditors Reconciliation. The Creditors Reconciliation. So in this chapter, I considered this chapter as one of the simplest chapter in accounting, because I love the way it ends, the way we balance at the end, the way we are satisfied after writing a certain assessment. So now, what is important on this particular chapter, students? First of all, you need to be able to know, is the reconciliation between who and who? As always, you are always a business. I want you to be the owner of the business. I want you to be the owner. So when you are doing accounting all the time, become the owner. It's going to be easy. So this creditors reconciliation is a reconciliation between the business together with the suppliers. And which suppliers? The one that the business buys on what? On credit. So that is the creditors reconciliation. It's a reconciliation where a business and the suppliers want to sit down and say, we have made a mistake on this point, we have omitted this and this, there is errors here and here. So it means that we need to sit down and rectify. Why we need to do that? So that the balance that the owner knows that I'm owing the supplier must be the same with the balance that the suppliers knows that the business is owing the supplier. I'm sure you are following on that part. And then, after knowing the participant on this chapter, number one, there are something which is important. That is the first aspect, which is very much important. The first thing that you need to be aware, student, we are talking about an invoice. Invoice is going to be very much important in this chapter. Invoice, what is an invoice? Invoice, we use it to buy on credit in this chapter. When we are buying credit sales, in other way, it means that the debts of the business are going up. Your debts are going up if you see the invoice word in this particular chapter. So it means that our debts will be going up. You must remember it's positive. And then there will be the words such as debit, or they can use the word credit note. Debit or credit note. So when you see these two ways in the transaction, it simply means that the company have what? Have returned. Meaning that something that we bought on credit, we have returned it back to the supplier. And remember, when we return things that we bought on credit, what happened to the debts of the business? The debts will be what? Will be decreased. So that's very much important. I'm sure you remember CAJ, Creditors Allowance Journal. So it affects that also. And then after that, we have what we call EFT. We have got what we call payments. Be aware of the word also, the receipts. So these three ways simply means that the business is paying its debts to the suppliers. Meaning that the debts of the business, what will happen? The debt will decrease, because when you pay your debts decreases. And then another thing that we need to talk about is interest. Interest. So the supplier will charge us the interest depending on the payments. Maybe the payments are late when the business didn't pay in time according to the agreement. So we are going to be charging interest on our debt. When they charge us the interest on the debts, it simply means that our debts are going up. So when you see the word interest, you must be very much carefully that the debts of the business are increasing because they are aiding the debts. And then after that, we also have what we call discounts. The supplier, sometimes they will reward you in a form of discount. If you are paying in time, they will give you discount in this particular chapter. So if you see this word discount, simply means that the debts are decreasing. So these words are very much important in this chapter. You must be able to understand them. So it means that when you start the Creditors Reconciliation, understand how this concept behaves in terms of the transactions. I'm sure you understand what I've explained. So that was the first important thing that we have in the Creditors Reconciliations. Let's look at the aspect number 2. And don't forget that is the reconciliation between the business and the suppliers that we are buying on credit from, which are the creditors. And then after that, you are going to have aspect number 2, which is the reason for creditors reconciliation statement. Why the businesses have to do this creditors reconciliation statement? What is the reason? What is the purpose in other way? Why we have to prepare this creditors reconciliation? Number 1, sorry, we want to ensure that all entries are correct. All entries are correct in ledger and in statement. So meaning that we want to make sure that the entries in ledger, the entries in the statement are correct. It's very much important to know that. That's the reason number 1. Another reason is that we want to correct errors, so that creditors are paid correct amount. So we want also to check the errors that have occurred, that whether the creditors have been paid a correct amount. And this reason I mean, also the reason to check whether the discounts have been deducted, the interest have been charged, the invoice have been correctly recorded or considered. So these are some of the reasons that why we prepare, or why the business have to prepare the creditors reconciliation. This is an aspect number 2. So it's very much important. And as you have understand the important concept, which is the number 1, invoice, discounts, etc., etc. Number 2, I spoke about the issue of the reason. Now I want us to check aspect number 3. Aspect number 3 is to talk about factors when changing supplier. So this question might come that what are the factors that the owner need to consider if they want to change their supplier? Maybe the current supplier, you are not satisfied with the service, and then what are the factors that you need to undergo in order to select a best supplier? Number 1 you need to check the issue of the price. So it means that the price is very much important. You must check whether the price is better than the previous supplier. Another thing, you need to check the quality. Is very much important. Check the quality of the products of that supplier, whether it's best compared to the previous supplier. You need to check the credit term. I'm sure you have learned the credit term in the debtor's age analysis. So the credit terms, it means that how long they allow you to repay them. Do they give you 60 days or 90 days? It's very much important also. And the other thing, you must also check, do they give the discounts on the early payments? Do they give the discounts on the early payments? Very much important to consider that. Another thing, you must check about the demand. So is this supplier going to meet the demand of the business? Are they going to produce for us what we have demanded so that we can satisfy our customer? So these are some of the factors that you need to consider when you are changing the supplier as the business owner under the Creditors Reconciliation statement. There might be others, but these are my top 5, which you need to consider that also. So this is aspect number 3. That is aspect number 3. So let's move to the next aspect. That was aspect number 3. We spoke about who are the participants in the Creditors Reconciliation. We spoke about the importance concept. We're talking about the invoice, the discounts, debit or credit note, the interest, the EFTs, etc., etc. I spoke about the reason why we prepare the Creditors Reconciliation, why it's important. I also spoke about the factors that we need to consider as a business when we are changing to the new supplier. What we have to compare, and then I want us to go now and do the real thing, which it will be number 4. So I want us to do the real thing. In number 4, we are going to learn about the first type, where we are going to reconcile. Let me call it creditors ledger, and then we reconcile it together with the statement of account. So this is a statement of account. Maybe here we can just put number, or which number is that? So this is the aspect number 4. Aspect number 4, it's more about the calculations to reconcile now. The first type of the Creditors Reconciliation, we have different types of the Creditors Reconciliation that we prepare. But the first step that we are doing today in this example, we are going to prepare to make sure that the credit ledger balance, it needs to be the same with the statement of account. It's also the part of the reason. So it means that in this first type of the Creditors Reconciliation, they will come to the exam and say, make the corrections, there are errors and omissions. So the creditors ledger and the statement of account, the balance at the end is not agreeing. So we need to make them agree. Are we all together, right? So I want us to start, and I have the example on my screen, which we are going to do this. But before we continue, let's just take a 1-minute break, and then we drink water. Then we'll come back. Thank you. Welcome back. Let's continue with our aspect number 4. On number 4, as I've indicated before the break, that we are about to correct the errors and omissions to ensure that the books of the business are corresponding with the books of the supplier. We know one amount that we are owing each other. So in this aspect, students, there are different ways of asking. They can ask you to correct the creditors ledger together with the statement of an account. So that's the example that we want to do. If they give you a question in the exam where you are correcting the creditors ledger vice the statement of an account, how do you account for that? And you need to know that the creditors ledger is prepared by the business. And this creditors ledger is liability. You know the rule of liability, right? Liability increase on the credit and decrease on the debit side. So mean that any mistake made by the business must go to the creditor's ledger. And then the statement of account is prepared by the supplier. Everything that we buy from that supplier, the supplier prepares the statement of an account and send to us. So this statement of account, which is prepared by the supplier, if there is any mistake made by the supplier, we must come to the statement of account and rectify that mistake. I'm sure you are following on that. So we have the question paper on our screen there. So let's quickly check the questions because before we started, we need to know what are the amounts that we have that are given on the answer book. They always give you those amounts. So if you can check on the 2.4.1, we are given the amount on the creditors ledger as 42,794, and then here 46,820. So this amount are always given. So you can see that they are not corresponding, they are not agreeing. Different amount, but we're trading to each other. So now we need to rectify this balance to be the same. So there are errors that the business have made, errors that the supplier have made. So let's go to our question paper. And more important, you must identify who is the business and who is the supplier, so that we can be able to know when the mistake is made, who is responsible to account for that mistake. So in our business there, as indicated by the question paper, our supplier is called the Big Music. Big Music is our supplier, and our company is Seb Sound Clinic. So that is our business. Supplier is a Big Music, and our business is a Seb Sound Clinic. So that is the name of the business and also the supplier. So now, any mistakes that we are going to identify there, we must ask ourselves who have made a mistake between the business and supplier, so that we know where to rectify in terms of discount, invoice, interest, and all EFTs, payments, etc., etc. So let's read the first mistake. According to the question paper, they are saying that errors and omissions, 2.4.2, a Big Music granted our company a discount of 67 Rand. Sophia credited this amount in the creditors ledger account of Big Music. Sophia, our internal auditor, credited the discount that we got from our supplier. First of all is to understand the word discount, that a discount decreases the debts. And when we have a discount, meaning that the debts of the business will decrease. On the creditors ledger, where the debts decrease on the debit side and the increase on the credit side. So meaning that discount affect the debit side of the creditors ledger. But mistake that Sophia have made, she have credited it in our creditors ledger. So because supplier give us the discount, but when she recorded, she credited on the creditors ledger. When you credit the creditors ledger, it simply means that you are increasing the creditors ledger. And now we are given the discount. Discount decrease what? The ledger. So means that she have made a mistake. When you made a mistake of the sign or side in accounting, you multiply by 2, meaning that we have to multiply that 67 Rand by 2, which gonna give us, number 1, we are rectifying that we must multiply by 2 to get 134, and then we minus it. Someone might say, why are we minusing? We are minusing because the discount. It's just that Sophia made a mistake by adding it on the credit side instead of minusing. Means that now already 2 amounts must be accounted. That's why we multiply to have 2 amounts, and then we do the right thing that we're supposed to be done. That is the first mistake that affects the discount issue. And then 2.4.3, they are saying that invoice 147 for 8,890 was incorrectly. So whenever you meet the word incorrectly, check who is after the incorrect. Who is the supplier incorrectly? Is the business incorrectly? So they are saying that was incorrectly reflected. The word reflected, where it's reflecting as an incorrect amount, reflected as 8,780 in the creditors ledger account of Big Music. The statement of account reflected the what? The correct amount. Are we all together? So invoice of 147 for 8,890 was incorrectly reflected as, meaning that it was reflecting as 8,780 instead of how much? 8,890, meaning that, and where? That is important, in the creditors ledger. Meaning that in the creditors ledger, the amount of that invoice was less than the correct amount. Meaning that we just have to find the difference. We add again. What is our difference there? So our difference is gonna be 110, and then we are adding again. Someone might say, why are we adding? It's because in the creditors ledger, we recorded the less amount instead of recording the bigger amount, and it's an invoice. What does the invoice do to the debt? Invoice increase the debt. So now, so this 110, we are adding it again because we want the amount to be equal to the amount that we bought from the supplier, because it's invoice and we recorded the amount which is under cost and we were adding. So we need to find the difference and we add again. That is number 2. Number 3, purchased a wiring costing 1,600 from a big music. This entry was omitted. So we purchased from our big music supplier, and then this entry was omitted. Where the entry was omitted, is it here or here? So they said it was omitted from the statement of account received from the big music. So meaning that we can't see that purchase on the statement of account. And whenever there's a word purchase, I forgot to indicate that purchase on the Creditors Reconciliation indicates it's like representing the invoice. Credit sales, credit purchase or purchase. It means that it affects the invoice way. Meaning that now in that Roman figure number 3, we are going to indicate. I forgot to indicate even the numbers here. Roman figure number 3. I'm going to add my 1.6. Why I'm adding? It's an invoice and it was omitted by the supplier. This studio is very, very, very hot. And then 2.4.5, they're indicating that Sophia correctly recorded an EFT payment of 4,000 in the creditors ledger account. Correctly recorded. Who recorded? Sophia, our internal audit. Our business correctly recorded that EFT payment of 4,000 in the creditors ledger account of the business Big Music on 28 May 2022. It did not appear on the statement of account. So that EFT is not appearing on the statement of account, meaning that Roman figure number 4, we are going to indicate that 4,000 must be minus. Why are we minusing 4,000? It's because an EFT. So the debts decrease when there's EFT. And then the next one, 2.4.6, they are saying that Sophia made a telephonic order to Big Music for sound and to the amount of 1,350, and immediately recorded this in the creditors ledger account of Big Music. However, this transaction did not appear in the statement of account received. It was established that those items were not delivered as Big Music did not have the stock and will not get the stock in the near future. So Sophia have made a mistake. Sophia were not supposed to record this invoice. Supposed not to record invoice because the goods were not yet delivered. So the supplier is saying that we don't have the stock and we are not going to have a stock in the near future. So we must cancel the invoice. This invoice, our Roman figure number 5, we have the 1,350. We have got 1,350, which must be cancelled in brackets. Why are we cancelling? Because it was a telephonic order. We were ordering, meaning that when we order, our debts increase. The last one, they are saying that Sophia correctly recorded an EFT payment of 2,840 and early payments discount. Those things are in there very small font. Sophia correctly recorded an EFT payment of 2,840 and early payments discount of 160 on 31 May 2022 in the creditors ledger account account of Big Music. This did not appear on the statement of account received. Are we all together? Meaning that when we come to this Roman figure number 6, here Roman figure number 6. So in this Roman figure number 6, they are indicating that Sophia recorded EFT, and this EFT and the discount didn't appear on the what? On the book of statement of the statement of account. Meaning that we need to record the EFT and discount decrease the what? The debt. So it's still the Roman figure, and then 2,840 in brackets, and also 160 discount in brackets, because they omitted this transaction. They don't have this transaction, so we must give them if the transaction is ready. So it's supposed to be this side. So these are the amounts that have affected us. I'm sure you have learned something in times invoice, EFT, and discounts. Unfortunately, we didn't have the interest in this instance. And then when you add the creditors ledger, I'm getting 41,420, and when I add also and minus these ones, I'm getting 41,420. So you can verify with the calculator if it's corresponding with my calculation. So this simply means that the creditors ledger together with the statement of account are now agreed. I'm sure you have followed the this aspect number 4. So please make sure that you watch this video as many times as you can, so that you can be able to understand this aspect. And make sure that when you are watching, have a notebook to copy the important aspect that I have said. So now, please go and watch the video again. I will see you on the next video when we continue with other aspects that are very much important on the Creditors Reconciliation statement. I'm Chakani Rutendo, I'm an accounting expert, and I'm done for now. See you next time. Subscribe, like, and share so that you can start building your accounting skills. #, our pride is more educational.